In 1923, a woman in Germany needed a wheelbarrow full of cash to buy a single loaf of bread. Not because bread became rare, because the money became worthless. And in Zimbabwe, not that long ago, the government printed a $100 trillion bill. One single note, $100 trillion, and it still couldn't buy a bus ticket. Now I know what you're thinking. That's insane. That could never happen here. But here's the thing nobody tells you. Every single currency that has ever existed in human history has eventually failed. Every single one. And the US dollar, the most powerful currency on the planet right now, is showing the exact same early warning signs that appeared before every major collapse in history. I'm not saying the dollar is crashing tomorrow, but most people have no idea what would actually happen to their money if it did. And that gap in knowledge? That's not just an academic problem. That's the difference between people who protect their wealth during a crisis and people who lose everything while watching it happen in slow motion. So today, whether you think a collapse is coming or not, we're going to walk through exactly what happens to your money if the dollar collapses, your savings, your salary, your debt, your investments, and what you can actually do about it right now. Most people picture a dollar collapse as one dramatic moment, like a switch flipping overnight. One day it works, the next day it doesn't. That's not how it happens. Think of it like a slow leak in a tire. You don't notice it at first. The car still drives. Everything feels normal, but slowly, quietly, the pressure drops. And by the time you actually feel it, you're already in trouble. Currency collapse almost always follows the same pattern. The government spends more than it earns. It borrows to cover the gap. The debt keeps growing. Eventually, the only way to keep things running is to print more money. More money in circulation means each dollar buys a little less. Prices start rising. People notice. They lose confidence in the currency. They try to move their money somewhere safer. The value drops faster. And at some point, the whole thing becomes impossible to stop. That exact pattern happened in Germany in the 1920s. It happened in Venezuela in the 2010s. It happened in Zimbabwe. It's happened in over 50 countries throughout modern history. Here's the number that should make you stop and think. The average lifespan of a fiat currency is roughly 27 years. A fiat currency, that's a currency backed by nothing except a government's promise. The US dollar became a pure fiat currency in 1971. That's when Nixon ended its connection to gold. That was 54 years ago. Take a moment with that. Now, I already know the counter-argument, but the US is different. The dollar is the world's reserve currency. Every country on Earth holds dollars. Banks, governments, oil markets, all priced in dollars. It's basically impossible for it to collapse. And honestly, that's not a crazy thing to believe. The dollar is more deeply embedded in the global financial system than any currency in history. But let me show you what's actually happening right now. Not theories, just the numbers. U.S. national debt as of 2025, over $36 trillion. The U.S. government now spends roughly $1 out of every 5 it earns, just on interest payments. Not paying the debt down, just the interest. The dollar has lost over 97% of its purchasing power since 1913. A dollar today buys what 3 cents bought back then. And globally, something is quietly shifting. BRICS countries, Brazil, Russia, India, China, South Africa, are actively building systems to trade without using dollars at all. Central banks around the world are buying gold at the fastest pace in decades. That's not a panic move. Central banks don't panic. That's a calculated signal. None of this guarantees a collapse, but these are the exact kinds of signals that showed up before every major currency weakening in history. So the real question isn't, will this happen? The real question is, what actually happens to your money if it does? Okay, so let's say it happens. The dollar starts losing value, fast. What does that mean for you personally? Your savings, your salary, your debt, your investments? Let's go through each one. Imagine you've worked hard and saved $10,000. It's sitting in your bank account right now. The number stays the same, $10,000. But one morning you go to the grocery store. Your usual $100 shop now costs $340. Rent went up, gas went up, everything went up. Your $10,000 is still there. But what it can actually buy? That quietly disappeared. And here's the messed up part. Your bank app looks completely normal. The number didn't change, but your real wealth did. That's how inflation steals from you without ever touching your account. Now your paycheck. Let's say your boss gives you a 5% raise. Sounds good, right? But if inflation's running at 40%, you just took a 35% pay cut in real terms, while thinking you got a promotion. This is exactly what happened to millions of workers in Venezuela and Zimbabwe, working harder than ever, earning more numbers on paper, but buying less and less every single month. Now, here's the part most people don't expect. Debt can actually work in your favor. If you have a fixed-rate mortgage, say you borrowed $300,000, and suddenly inflation makes everything cost 3 times more, that $300,000 debt actually becomes easier to carry. Why? Because you're paying it back with cheaper dollars. The number you owe stays the same. But in the new inflated reality, that number feels much smaller. This is exactly what happened to homeowners during high inflation periods throughout history. People with real assets and fixed debt came out okay. People sitting on cash savings got destroyed. And the stock market? It gets complicated. During currency collapse, stock markets often go up in number terms, but that can be completely misleading. Some companies hold up really well. The ones that own real physical things, real estate companies, energy companies, commodity producers, things people need no matter what's happening in the economy. Other companies get hammered, especially the ones that depend on people spending freely, or businesses deeply tied to international dollar trade. The market going up during inflation doesn't always mean people are getting richer. Sometimes it just means the numbers got bigger because the currency got smaller. So that's what happens. But the more important question is, what actually protected people when this happened before? We're not guessing here. History already ran this experiment multiple times, and we know exactly what worked and what didn't. Gold. In Weimar Germany, people who held gold came through almost completely fine. While their neighbors watched their entire life savings become literally worthless, gold holders simply converted small amounts when needed and lived normally. Gold doesn't pay dividends, it doesn't build a business, but it holds value across centuries for one simple reason. You cannot print it. Real estate. But with a serious warning, physical property generally holds its value when currencies collapse. It's real, it's tangible, it exists. But here's the part nobody mentions. If you can't afford the mortgage payments during an economic crisis, the property doesn't protect you. Leveraged real estate in chaos can actually destroy you faster. Owned outright? Historically, one of the strongest protections there is, foreign currencies and assets. During Venezuela's collapse, people who already held US dollars were in a completely different situation. While people around them scrambled to survive, they had real purchasing power. The interesting thing now is this. If the dollar itself weakens significantly, people would start doing the same thing with other currencies or assets, which is exactly what's quietly starting to happen in parts of the world today. Bitcoin. This is the modern wild card. Some people argue Bitcoin is basically digital gold, fixed supply, can't be printed, no government can touch it. And during Turkey's currency crisis and Lebanon's banking collapse, Bitcoin usage spiked dramatically as people tried to protect what they had. But Bitcoin is volatile, extremely volatile. In a serious crisis, that volatility can hurt you just as badly as it helps you. Most serious investors treat it as a small slice of a bigger strategy, not a solution on its own. Okay? So what do you actually do with all of this? Here's the thing, you don't need to believe a collapse is coming to make these moves. Think of it like car insurance. You don't buy it because you plan to crash. You buy it because crashing is possible. And the cost of not having it is enormous. First, don't sit on too much pure cash. A month or two of emergency money in cash? Smart. Years of savings slowly losing purchasing power every single year? Risky. Move excess cash into assets that actually hold real value. Second, own something real, real estate, index funds that hold real companies with real assets, commodities, things that exist in the physical world. These don't evaporate when a currency weakens. Third, know what you actually own. Most people have no idea what's inside their retirement account. If everything you own is dollar-denominated, you're fully exposed to whatever happens to the dollar. Even 10 to 20% international diversification changes your risk picture completely. And fourth, learn from history, not headlines. Every major financial crisis in history had two groups of people: the ones who panicked, made emotional decisions, moved money at the worst possible time, and made everything worse. and the ones who understood the bigger picture stayed calm, held real assets, and came out the other side stronger than when they went in. The difference wasn't luck. It was understanding how money actually works. Here's what I want you to walk away with. A catastrophic overnight dollar collapse? Unlikely. I'm not here to scare you into anything. But purchasing power quietly shrinking every year, the dollar slowly losing its grip on global trade, that's not a conspiracy theory. That's already happening. Right now. Every year, in the background, the question isn't whether your money is under pressure. It is. The question is, are you building wealth in a way that accounts for that reality? Because the people who truly understand how money works at this level, they don't just protect what they have. They position themselves to benefit from the very forces that quietly destroy everyone else financially. That's the real game. And now, you understand it a little better than most people ever will. If this gave you something real to think about, hit subscribe. Because this is exactly what this channel is about. Not surface-level tips, not obvious advice you've heard 100 times. The real mechanics of money, wealth, and how the financial world actually works. New video every week. I'll see you in the next one.